Hello students, I'm Miss Catherine Otiti. Welcome to today's class. Hope you all are keeping hygiene and staying safe. Today's class will be discussing on the topic double entry bookkeeping. Now in our last time class, we discussed on what bookkeeping is. Let's refresh back our memory. What is bookkeeping? Bookkeeping can be defined as a systematic recording of business transactions in which into the appropriate books of account. It is recording financial transactions which include sales, purchasing, income, receipts and payments in a set book in order to obtain them when necessary or when required. And bookkeeping can be performed by a bookkeeper. Now let's move to what double entry bookkeeping is, or what double entry is. It is a principle in bookkeeping that says that for every debit entry, there is a corresponding credit entry, or for every credit entry, there must be a corresponding debit entry. Therefore, any transaction or every transaction must be recorded twice, both on the credit side and also on the debit side. Remember the golden rule: we debit the receiver and we credit the giver. We debit the receiver. The receiver is usually debited and the giver is credited. Now, what is a ledger? A ledger can be defined as the principal book of account. It is where the final transaction is recorded in the journal. Now, the ledger is divided into two parts, which are the credit side and the debit side. The ledger is the debit side of a ledger receives value, while the credit side of a ledger gives out value. Now below we have the format for a ledger. Usually a ledger usually have date, particulars, folio, amount. That is for the debit side. Remember I said whatever is recorded on the debit side is also recorded on the credit side. It is a two type of entry: debit side and the credit side. The date is when the transaction took place, the time, the year, the month. That is why the date is very important in every account. Particulars, these are items, goods bought. Then folio. Folio means the page number for easy reference, for easy access. When you want to use the information, the folio can give you, or is easy for referencing. And then the amount for the transaction, the amount of money or cash involved in the transaction. Now we also have this in the credit side. We move to classes of accounts. Accounts are generally classified into 1. Personal accounts, impersonal accounts, and private accounts. What are personal accounts? It is an account in which transactions are recorded. In a personal account, we have the debtors account and the creditors account. Impersonal account. Impersonal account is an account in which income and expenditure are recorded. Impersonal account is divided into two or subdivided into two. We have the real accounts and the nominal accounts. What are real accounts? Real accounts, or these are accounts for something we see. This is an account for assets like buildings, land, machinery, goods, motor vehicle, for things that we see and can touch. While nominal accounts are accounts for expenses incurred, income received, losses and gains, like rent, example like rent, like insurance accounts, discounts received. We move to the last one, private accounts. What are private accounts? Private accounts is divided into two. It has the capital account and the drawing account. The capital account contains amount of money which is used in starting up a business. It is an account for recording a certain amount of money invested in a business, while drawing account contains withdrawals of money in cash or goods by the owner of the business. It is an account that contains the amount of withdrawal or cash or goods by the owner of the business. With this, we can now differentiate or give examples of different classes of accounts, difference between bookkeeping and double entry bookkeeping accounts. Thank you, and please endeavor to attend and do your assessment and submit. Stay safe. We'll meet in the next class. Thank you.